Hey there. Alright, we're at video number 38 and video number 22 of module 2, and this will be the last video. And this particular video we're going to talk about 4 indicators at once, just very briefly, and then I'll allow you to, at your own leisure, to try them out and see if it suits your understanding. Alright, the first one might be a little bit easier for you to understand, and this is called the relative Vigor index. Alright, so go ahead and just plonk this onto the chart, and I believe it does have values in there for some reason. Let's go to a higher time frame, maybe daily. Okay, so this is on a daily time frame, and really the general rule here is basically when this one here, well, I think they've both got different values on them. No, they may be the same. Well, this green one here actually crosses above the red, and that's the time to go long. Okay, and when it crosses below the red, it's time to go short. But again, sometimes this doesn't always ring true, because you'll get a cross here and then it'll come over here as well. So you've got to try and find a way of filtering out these possible occurrences where you could lose the trade. So what I would do to be on the safe side, let's bring this down to 4 hours so we can find more examples. What I would do to be on the safe side, as you may remember before, that we always take buy opportunities, offer support levels, and we always take sell opportunities off of resistance levels. Alright, so when we take a look at a crossover, we really want to pay attention to the crossovers that happen or appear above the 0, 0 line for a buy opportunity. Alright, to go with the bulls. So anything above the vertical scale, the 0, 0 or the positive territory, we want to see the green line cross the red. Here is a green line, the red crossing the green at this particular instance. Then we want to take a look at our support and resistance levels. Alright, so well, from this section here, we're more of like a bit of a resistance level here, but it wasn't kind of agreed with around about there, but that doesn't really appear until later on, so we ain't even know that's going to happen. So it does kind of really appear on the verge of a resistance level, so we could possibly get away with that. But once it does, alright, once it breaks, you want to then sort of go ahead and target the top of maybe the resistance level, or even pull the chart back a little bit. Let's take the auto scroll off. Pull the chart back a little bit and target the next previous high, which is right there. Alright, so above the vertical scale, looking for a buy trade, green goes above the red, right there. Here it is here. You might want to wait for a conservative approach for a breakout. Like for instance, we can go ahead and put in some shapes here. Let's try a rectangle, and here is a line here. So you might want to wait for a breakout of the top before approaching a buy entry. Alright, so depending on how conservative or how aggressive you want to trade. So you might want to wait here, and you can see that this is also a support line. Alright, so once it breaks the support, you can then probably attempt that long trade and put your stop loss down the bottom here, or put an imaginary stop loss down the bottom here. We are on a 4-hour time frame, so you can allow the trade to move like 200 pips in one direction at any one day. Alright, so yeah, so there is your buy trade opportunity. Go long and then basically target the next previous high. Here's one here, or you could have got in here and then got out there for 85 pips. That's completely up to you, which also rings true because over here we've got some more support, so this would have favoured this level to be a more precise level. Alright, yeah, and basically vice versa for a short trade. Let's take a look. Here's a short trade opportunity right here. You can see this time that the green's come under the red line, plus it's also appeared below the vertical scale. So there's a sell trade opportunity, and it appears right here. Let's take a look. There's no immediate resistance or support, so that's good. We can go for this one and target wherever. I mean, we don't know how far this is going to come down, so what you're going to need to do is maybe mark our point so we can come back to it later. And it's just to zoom out a little bit and move the chart over a little bit more and work out where the next support line is. Okay, here is some area where we see that the market is really basically came down, went back up, stopped, went back up, and it came all the way back down again, and it retried those levels. So this would be a support slash resistance level. And then we go back to that point where we marked, and where did that line come in? And it's down the bottom here, look. Okay, so that is our projection point that we could use for this sell opportunity, and there's nothing stopping it all the way down to that black line. It's 305 pips, and that doesn't happen until way over here, which is like 184 bars away, which is a lot. 572 hours or something like that. Alright, it's crazy numbers, and I don't think the average person would wait that long. I mean, that's like cracky. Over a month, innit, I think. But yeah, so yeah, you could just say to yourself, you know, where would you want to put your target points? And if your black line is there, you might want to say to yourself, like I mentioned before, allow for margin of room of error. And you might want to come off maybe 50 pips and come in a little bit more. And then if you see that this is a point where the market has bounced off several times, it's an indication to tell you that, okay, we've now established a new support. Alright, by these candle formations, because they didn't really break. They kind of, you know, back to back sideways, didn't really want to push away from each other. They just, you know, stuck close. So that's an indication there's a bit of a minor support that's appearing, and then it starts to ring true over here. It starts to build it up, and then it breaks that, goes back to the major support was here, when that one was developed from going back all the way over here, was back in August. Alright, and also back in September. You know, always use that previous data. It comes in extremely handy. Alright, and it's free data as well, so use it. Alright, so that's the relative Vigor index. Let's take a look at quickly the standard deviation. Now this is mad. This is just, I'm not really going to explain this one. That's what you get. So there's not really much that you can take from this. Okay, you can apply putting some trendline tools on there and working out a pattern when it breaks, and you know, and what have you, but I really would not bother your time doing that. I'd rather you just understanding what it can do, and if I say don't try it out for the long term, don't try it out, you know. I'd rather you just to stick to an indicator that I know that works very well all the time, or at least 90% plus of the time. Alright, the volumes. So the volumes, again, it's quite hard to understand. I know the basic sense of it, but it's just too much mind processing, and it's too much for me. Alright, so I don't want to let you go through that pain either. Okay, so here is the Williams percent range, and this is again the same thing really. Alright, tells you when to go short, tells you when to go long. Anything above the -80 is the time to go long. Anything below the -20 is the time to go short. You can use a separator again by putting one in at the bang in the middle somewhere. So 50. So at -50, you could then use that as your trigger point. This bottom line as your alert to go long. This is your confirmation to go long. Alright, and only in that order, not when it comes down and then comes back up above. Alright, have an order, have a preferred sequence. Alright, so here it's come back below -80, it's penetrated -80, and it's then gone ahead and, you know, penetrate -50, go long. Alright, now it's come back down again. You might be a little bit skittish here, but again, 4-hour time frames, let the trades play themselves out. Alright, but again, it's a skittish kind of indicator to use, and I don't really want to mess you around with any kind of indicators that are going to mess you up. Alright, we talk about standard deviation, the volumes. Yeah, so, okay, so now we're going to get into module 3. okay, in the very next video. And module 3 is going to be one where you might have to go back several times, not just 2 or 3 times, but maybe more than once, because I'm going to contain some like risk management stuff in there as well. All the nitty-gritty stuff, the stuff that basically goes through my mind. Alright, okay, so congratulations, and I will see you very shortly in module 3. Bye for now.